Well, thank you for joining us here on the Market Day Report. I'm Marlon Bowling with you on a very busy Tuesday. We're sorting through all the numbers that we had from USDA a short time ago, and it included our supply and demand numbers mainly, and then they also had some production numbers for Brazil and Argentina. And we'll kind of run through these numbers real quickly here and then go to the trading floor in Chicago. On the U.S. ending stocks numbers, we did come out at 1.86 billion bushels, very close to what the trade was looking for, just slightly higher. Soybeans, 445 million, was about 11 million under the average trade guess. Wheat came in at 976 million, and that was 2 million under the average trade guess there. As we look at the world ending stocks, on the world numbers, here you have the corn at 208.9 million metric tons. Trade was looking for 208, so a little heavy there. On the soybeans, 79 million metric tons. The trade was looking for 79.4. And the wheat, 239.3. That was significantly above the average trade guess of 237.2. As far as Brazil production on the corn and soybeans goes, it wasn't much of a change. We had Brazilian corn at 84 million metric tons, a little bit under the average trade guess. Soybeans 100 even, just slightly under the average trade guess. Argentinian corn 28 million metric tons. Now that would be up about 800,000 from the average trade guess. And Argentina's soybean production was just as expected, well, close to what was expected, maybe just slightly under the average trade guess there. So let's go to the trading floor. We have BubbaTrading.com's very own Todd Horwitz standing by to talk with us from the edge of the CME Group trading floor. All right, so after the report came out, it seemed like the markets kind of ran out of gas here. Todd, tell us what's going on right now.
Hi, Marlon. Yeah, you know, I mean, we talked about that. I was actually on twice today. So earlier I said that the reports don't really mean a lot, and they looked like they were pricing in some bullish numbers, and I couldn't see how bullish a report could be to push them higher than they were. And of course, we're seeing a little bit of pressure, but not a ton. I mean, we're really just churning around. You know, one of the things we have to always remember is that markets themselves will learn how to price themselves. Asset classes do the best when they're getting true price discovery. I think that's what we're really seeing, and now we're seeing where the real buyers and sellers are not worrying about the report. And I think that the buyers tried to step up a little bit. Maybe there's a little short covering coming into the report. Now we're seeing just a slight pullback. But again, we're very quiet here, like we're waiting for something more to happen later. And I think we'll see some more action as the weeks start to wear on here. But right now, we're really just kind of very subdued and quiet with in range-bound trading, really.
All right, Todd, now where do we go from here now that the market is kind of trying to digest all this information? Where do we go? Weather markets or what?
Well, no, I think we go to trying to figure out and watch what the price discovery model is going to tell us. I think what you're going to find out is probably corn's going to work its way down to 360 or 355, which I would think would be a nice spot to try to buy in here. I think 365 on the upside's fairly good resistance right now. We can see this morning's high was 365.50. I think in soybeans, I think they were more driven over the last couple of days over more short covering. I think those have a little bit more room to do on the downside. Now, overall, I'm bullish here, but I'd like to see a pullback from here, and I'd really like to see around the $9 level in the near term, because I think that's a great spot where we're going to see a nice bounce off of. And wheat remains stuck in that 445, 450 to 480 range. You know, we saw wheat had a little bit oversupply, and yet it's still higher this morning. So these are pretty much range bound, and the markets really indicate where they should be going, because true price discovery will always give you a better clue.
All right, Todd, for the benefit of our folks listening on Sirius XM 147, let's run through the prices real quickly here on the corn market first. We'll pull that up. And after the report came out, we have May corn now 1 3/4 higher at 358.5 per bushel, so it's backed off by about 7 cents from our earlier high today. On the soybean trade, we have the May contract there now 3/4 higher at 9.29 per bushel. That's off of its high by over 8 cents now. November is up just fractionally. And in the wheat trade in Chicago, we have the July contract 4 3/4 higher at 4.59, kind of in the middle of the trading range today. Cotton market on July right now, we'll pull that up. And on July cotton, we are still 86 points higher at 61.10 cents per pound. So a pretty good rally in the cotton market today. We'll come back in a moment and we'll talk about the livestock trade with Todd Horwitz when we come back right after this. Well, we're back with you here on the Market Day Report. I'm Marlon Bowling. We're going to talk a little livestock market action now with a little extra help from Todd Horwitz. He's with BubbaTrading.com, and he's positioned right there at one of the trading floors there in Chicago at the CME Group. All right, Todd, as we take a look at the livestock trade here today, it was interesting. We had a lot of pressure on the futures on the cattle market, and then we got the beef cutout values released at the midday update from USDA, and man, they were sharply higher. In fact, I'm showing we were $2.50 higher on the choice cuts this morning, and it seemed like when that news broke, that really prompted the cattle to come well off of their lows. Instead of going lower on the day, they turned around and went higher. Let's go ahead and take a look here at the live cattle trade. Right now, up to the minute quotes show June 53 cents higher per hundredweight at 123.75. So we're now only about 30 cents or so from our high of the day, well off of our low by $1.10. August live cattle up 43 cents right now on the feeder cattle side. Now here we have the May contract 52 higher at 152.55. That's $2.35. I'm sorry, off of our low of the day, and only 30 cents from our high. August feeders now half a dollar higher at 153.30. That's a pretty good turnaround in about an hour's time there in the cattle complex there, Todd.
Yeah, it is, Marlon. But again, I think we look at this and we're really in a range-bound market. I mean, I think if you look at the live cattle basis June, you've got 120 to 125. You got a little selling pressure. Remember, we had an old level at 122 in which we bounced off of, and we're now seeing a run. I wouldn't be surprised to see us get to 125, in which I think we'll probably see a pullback. I think ultimately we're going to need to trade at 120 or maybe a little bit below before we're going to get a bigger move to the upside. I do like the space. I do want to be bullish here, but I also want to wait for the right time and by technically where the best opportunity for me to get in. And then in the feeders, I think we're clearly 148 to 155. So we got a little bit of a pullback. We got close to 150 earlier, which was our old level, and it popped. It's not surprising, but really what you're seeing is a lot of two-way back and forth trading. And we could see a run up to 155. Wouldn't surprise me, but I think you're still going to see work back down to 150 or maybe test that 148 support level, in which there I'd like to be a buyer. I think that's what you have to focus on when you're in these spaces, is not the overall day-to-day movement, what happens, but look for the longer term, where you're going to find support, where you can get some true price discovery and find some new money to come and buy it. And that's always the key of trading these things.
But what about the hog market? If we look at the lean hogs, they seem to have had some issues, like they're bumping their head against some resistance here. We have May lean hogs down 12 cents at 75.28 per hundredweight, and the June, the most active, is down 27 at 79.35 right now. That's 40 cents from our low, but about 80 cents off of our earlier high today.
I think the hogs are in trouble here. You know, I love them over 72. We looked for that breakout. They broke out for about 2 days, and then they came down. And once we came back through 69, they became very ugly. And I think what you're looking at here now is a market that is in very much confusion, but heading lower. And I think you got to watch 66 and then 64. But when you look here, and this is where it gets a little tricky, Marlon, is we've got contango for the next two expiration cycles, but once we get past there, we go into backwardation. So if we can't get a move here in the next, like a couple of weeks, 3, 4, 5 weeks, I think we're going to probably start to continue to head lower, and it could get ugly. But I'm looking for some support at 66 and then 64. I think we'll get a pop. I do like the space, but I do not like the way that they're acting right now. Once they broke that 69, they got extremely ugly coming down.
All right, thanks, Todd. Appreciate it. Todd Horwitz with BubbaTrading.com in Chicago. Exciting markets, lots of gyrations right now.
And it's only Tuesday.
It is. Got a long way to go yet.
Got 3 more days in the week.